Hi everyone and welcome to this market analysis video by PipsMatter.com. Here's everything you need to know before you start trading today. We had lots of things happen yesterday, lots of correct predictions, and we're going to try to do the same today, just with a little bit more risk. So first things first, the Bank of Norway today. The Bank of Norway will hold its interest rate decisions in about 54 minutes from right now. We expect the Norwegian bank to keep its key interest rate actually unchanged at the MPC meeting today. It is very important to note on the other side that in June, the Bank of Norway indicated an almost 100% probability of a cut this September. But now the risk on the outlook has actually changed significantly, and we have 2 points for this. The first point is there are now very clear signs that growth in the Norwegian economy is actually picking up significantly, and that the risks of a deeper and more downturn has actually decreased greatly. Now, point number two is that the housing market has tightened a lot over the summer, and there is a significant increase in price. Now, this means that the future rate, that reduction is no longer necessary when it actually comes to growth. This is how interest rates work. Growth in the economy is picking up. There is no reason to cut its rates. I'm quickly moving in to the NOK, to the Norwegian crown. And if our call is actually correct on the Bank of Norway today, and if they keep an unchanged policy on the announcement, this will actually send Euro NOK much lower. We are actually already in sell positions. We are taking a risk of 0.75% in those positions. And here's the best case scenario for the next couple of weeks and months. The best case scenario for Euro NOK is that the cross will actually remain range bound between 9.15 and 9.35. This is for the next 3 months, let's say. But we do see near-term risks of price actually shooting up and breaching up the upper limit much more. So let's say 9.5, maybe 9.6. Now, yesterday we also had the Bank of Japan meeting. After that meeting, we do continue to see USD JPY ranging with a very strong possibility of breaking below the 100 level for the medium to long term. We expect the market to continue to price a very strong probability of a Bank of Japan rate cut in the coming months, which will pretty much remain a supporting factor for the cross, basically supporting it on the upside. Here's the oil market. And regarding the oil market, the weekly inventory data from the U.S. Energy and Information Administration showed a very large decline last week. Now the numbers further indicated that the U.S. crude production actually rose for the second consecutive week, which actually suggests that the demand for oil is actually relatively strong. In regards to oil, we have a very important meeting coming up with Saudi Arabia and Iran. We remain very bullish on oil. We still are, and we have been since 3 days ago. We have been buying oil, which means we have been selling USD CAD, and we have been buying AUD USD. You've heard that in the last 3 days and in all of our posts on social media. There was a bird fight yesterday at the FOMC meeting, basically the doves versus the hawks. Yesterday, with the irony, and here it is, we had a very hawkish statement, not a very hawkish statement, but we had a hawkish statement and a very dovish Yellen. Now, as our prediction stood, the FOMC actually maintained the federal funds rate target at 0.25 and 0.5 respectively. Looking at the rate decision a little bit more, there were 3 dissenters. First was Mester, George, and Rosinger. They've been voting for an immediate hike. And since the 3 FOMC members have officially joined the no hike this year camp, we're actually dealing with a very divided FOMC. While the statement was quite hawkish, we think that the Fed Chairman Yellen was more dovish during her press conference. The statement stated that the labor market has continued to strengthen, which in my view is incorrect because since 2014 it has been dropping. And that growth has actually picked up for the modest pace seen in the first half of the year. Now, although near-term risks to the economic outlook appear roughly balanced, and the case for the hike has actually strengthened in the FOMC statement, the FOMC decided for the time being to wait for further evidence of continued progress towards its objectives. Now, at the press conference, Yellen highlighted again and again that the PCE core inflation, which, by the way, is their number one inflation indicator, has run below the 2% target for quite some time, and that there is no scope for further improvement in the labor market. So you see, the statement says that the labor market is booming and everything is great, but Yellen says that it's not. So it's a very divided FOMC. It's very important to note that the more hawkish statement actually puts pressure on our Fed forecast that the FOMC will not be raising its interest rates. We do stick to our view that the Fed will not be hiking this year, especially as we think the Fed is very optimistic about the current economic situation, given the weakness of the ISM and retail sales. But it's still a close call, and you never know what could happen. Incoming data will be analyzed very, very much in the coming months, and we will see volatility in the markets as the market will react to positive and negative data surprises. Also, in our view, one should not be fooled about the FOMC's eagerness to hike, as the Fed has communicated an upcoming rate hike the whole year, and we are almost at the last month of this year. Markets are now pricing a 60% probability of a rate hike. I'm going to move into the trading platform, and I'm going to show you very quickly I'm going to continue to indicate our predictions. We are buying WTI. We're buying Euro USD. We're buying GBP USD. We're selling USD JPY. There will be a good chance to sell it throughout today, as it will be rising a little bit. So it's going up and then down. AUD USD, we're buying. We're almost at the top peak over here, and I would not suggest anyone to re-enter until we do not have a confirmation of what will happen here. Tomorrow we could see stagnation in price before we decide where we're going to go. Euro JPY, we're not going to be touching this. Gold, we're going buy. Euro GBP, we explained this a few days ago. We're waiting for a confirmation of a head and shoulder setup here. We will continue to sell. New Zealand US dollar, we're not touching. USD CAD, we're selling. Well, that's pretty much it. I thank you all for watching this session, and if you haven't registered for any of our live trading chambers, we will be hosting 2 a day, every day from Monday. 1 in the morning for the Euro UK session, and 1 in the evening, 1 in the afternoon for the UK US session. Thank you all for coming. I wish you an excellent trading day and happy trading. Bye now.